Hi everybody, it's Emily from the channel Mindfully Trading, and I didn't really want to do this video today. I very nearly didn't record it, but I've done it to stick with my Tuesday routine and to share my progress with you guys. But it is a red day, and it's a bit of a confusing red day to be honest, because I got up this morning for the London breakout session at 7, and a couple of hours in sort of keeping an eye on the charts, I felt like there wasn't really anything moving. There wasn't really any kind of higher probability trading opportunities. And so I told myself I'd wait until the New York Open, but as things were transpiring, I felt like it was going to be a no trades day. So the New York opened, and an hour into that, again, I didn't really have any clear breakouts, any clear moves, or anything that usually matches my strategy or my plan. And so I thought I wasn't going to trade today. And I was going to create a video for a no trade recap for you guys, just to share my experience really, and the importance of not trading. But then I took a trade and it wasn't the best trade at all, and it was a loser. Basically, it's a red day recap. I guess it pretty much supports my original idea for a no trades recap, because I would have rather have not traded today and been break even in my account than pushed it on what seems like an unpredictable choppy day and taken an unnecessary loss, which is really frustrating. But these are the things that we experience as traders, and that I'm certainly experiencing as a beginner trader, and it's why I'm doing this channel, to share with you my journey and to share with you where I'm going wrong, which seems to be a lot of videos lately, but that is what this channel is about. So I hope you're going to enjoy it. Drop me a like and don't forget to subscribe if you're not part of the channel, and we'll dive right into the video. Just before we skip to the intro, I just want to give a shout out to one of our subscribers, Logan, who has created a fantastic intro for the channel. So thank you very much, Logan. If you're interested in some of the work that Logan does as a filmmaker as well as a trader, I'll include his details below, and we'll dive right onto the screen and break down today's losing trade. Okay, so you can see my broker account here. I took the one trade on the Great British Pound to US dollar, which was a losing trade, unfortunately. So minus £4.91, which is just slightly over 1% on the account. It's just the way the lot sizes worked. So I'll just load up a couple of the charts I was looking at this morning. So I had a look at the Euro USD. So this is the hourly chart here on the right hand side, what I was looking at about 7 this morning. And we've sort of tested this trend line here, which is actually on the weekly chart. Okay, I'll make this a bit bigger. Well, I'll show you how I did this morning. So I went onto the daily chart here, and as I said, we've got this trend line, which is actually a weekly trend line. So it's quite a significant resistance the moment as we were underneath it. And we've setted it here, as you can see, coming down, consolidated, testing up here, forming this kind of cut pattern. And moving down to the 4 hourly here, we can see this test and the rejection, which actually happened yesterday. On the 1 hourly, as I said, at 7 o'clock, we had this consolidation here along the 20 moving average. And I was just watching here because although we are in this uptrend, I felt that because we'd rejected this trend line, we may see a move to the downside. So I was looking at this initially for a short, but I kind of felt like it was quite a risky trade, because we are in an uptrend, and on the 4 hourly chart for the same sort of time period, which was this current candle, which hadn't actually closed at the time, was above the moving average again, and we've had these sort of green candles, so there's no clear indication of it going short. So it's why I didn't take the trade here, because the larger time frames didn't really confirm anything. And I'm glad I didn't, because although I set this target tool here with TradingView, had I gotten in the break of this horizontal ray, I would have initially seen this sort of move down, but it wouldn't have even hit my 1-to-1 target before then returning and going to the upside and hitting my stop. So that was this morning, and as far as I'm concerned, I kind of avoided loss there, so that felt pretty good. I'm just going to remove that now, just to tidy up my charts for tomorrow. But as you can see now, it's going quite interesting. It's actually broken that trend line and looks to be moving higher, so it'll be interesting to see how that plays out. So that's Euro USD. And I also was looking at US dollar to Canadian dollar this morning, and again, just sort of taking the chart back, So this is the hourly chart, and here we have the same as the Euro USD. It's a trend line using the weekly chart here that we'd actually broken above. And then I had a couple of horizontal rays here marking some potential resistance. And the close of the 7 o'clock candle here kind of came down to this trend line, and I was quite interested in getting short because I felt like we were going to break this trend line and move back below that. But we can see we've got the daily 20 moving average here, which would be another resistance, and it's just a bit choppy really. There's not really much range on either side. It's better to wait, I think anyway, for it to break either to the downside or to the upside, these points that are in the way, so they're resistance, and then use them as support. So I didn't take the trade for that reason. And again, it did actually break to the upside, but then it's come back down and it's now testing this trend line. So it's quite choppy. It's not really made its mind up, but as far as I'm concerned, again, I avoided a loss there, so that's pretty good. I was also interested here on the New Zealand dollar to the US dollar for a short, as it was in this little downtrend below the moving average, and it was just consolidating here. I didn't take the trade because we had the daily moving average below, so I felt like again it would not really have that much range before it came to that resistance point, and by the time I calculated my stop, my target would have been past that, and I just felt like it was too risky to quantify the trade. But I'm not sure, had I taken it I may have gained some profit, but again it would have been a risky position, so that's why I chose not to take the position on that one. But the trade that I did actually take in the end was, as I said, on the Great British Pound to the US dollar. And I'll just load this chart across here, and let's have a little look first on the daily just to get the larger perspective. So zooming right out, we've been in this consolidation here. And again, it feels like it's been consolidating below this sort of horizontal ray and the weekly moving average here. It feels like it needs to decide on its trend. I mean, that's the nature of consolidation, right? And it can be very difficult to trade consolidations. But moving into the 4-hourly time frame here. And we had been in this uptrend, and then we've come down a little bit. And this is the 4-hourly, as I said. So we've had this little drop down. But it did close above the 200 moving average, so it's still considered to be an uptrend at the moment. And I actually got into this at 12 o'clock midday GMT. So on the hourly chart here, we can see that what I was interested in is the fact that the daily moving average was here, as you can see the dotted blue line. And we had 1, 2, 3 hourly candles actually reject this point, making these pin bar moves here, which I took to be a bullish sign. And I was interested in going long position here. Even though we do have the moving averages in the way, I was focusing more on price action and respecting the larger time frame moving average of the daily, and then also the weekly that was below that. So I actually got into this position the break of this closing candle on the 1-hour chart. So it was about 12 o'clock when I took the position, which was around about 1.2523. And as we can see, it didn't really go very well, unfortunately. So I'll just sort of divide the time frames up because I was also using the 15-minute chart. And on the 15-minute, I sort of saw this W pattern, so I thought it would go higher, which it started to, but then we had this rejection here at this horizontal ray and it broke below. And at this point, it made some big moves down, during which I did have a point of getting out around about my entry point, which I considered, but I decided to trust my plan, which was yeah, which was So I did have the opportunity of getting out of this trade break even as it was coming back down, but I decided not to because I thought following my plan would be the better decision. Mixed feelings about that now, but it's all part of the learning journey. But when these did make these big drops down, I then looked at Forex Factory, which confirmed that there was news on the US dollar. 130, which is probably around the time of those candles. Let's just have a look just to compare. Yeah, 130. So from 130 is when initially we were making this nice move up as per what I was predicting. And then came 130, we had these strong bearish drops, which evidently hit my stop. And that coincided with this news, which was a bit annoying because I do check Forex Factory in the morning when I usually trade. Come midday, when I was syncing up with the New York Times, I didn't actually double check, which it's why I probably shouldn't have traded, because I think personally, I'm sure that many people will agree. Let me know in the comments below what your thoughts are. But I think that when you sit down to trade the charts and the markets, I feel like the longer that you are there, analysing, you know, looking for these potential trading opportunities, it's expending your trading energy. And I think that has a knock-on effect with your trading psychology as well. So I think that, and your awareness and your kind of resilience to react to emotions, I think that that can come down as well. So it can take away that kind of focus and mindfulness as far as trading is concerned, which is what I felt like I experienced, because the trade I actually took, which I'll go into a little bit more detail with in a moment, on the pound to the dollar, was not really in line with my plan. Now I'm looking at it, now I'm not in the zone looking at charts. Now I'm looking back and reflecting, I'm thinking, oh God, it wasn't even that good of a trade anyway. But it's just what happens, I guess. It's just part of the journey. But anyway, I mean, I got in off these candles rejecting this moving average to long side. But the reason I say it wasn't really in line with my plan is because I tend to focus more on following the trend, because the trend is your friend, right? And it can be easier to go with the flow of the overall market rather than against it, which is what this was trying to be, was a counter trend trade, using these pin bar rejections of the daily moving average. But as we can see on the 50-minute here, we did go up to the upside a little bit, and then here came the news and it just dropped down. Went through the daily moving average, went through the weekly moving average. So the 2 points I was using as resistance, because I had my stop placed about 6 pips below the weekly. So I got stopped out at 1.2492. Price action actually went down about 12 pips below my stop, and then now it's sort of coming back, but it's probably just pulling back, as is the ebb and flow of the market. But yeah, I know it doesn't really do well to be annoyed at yourself, but we're human, aren't we? And quite honestly, I'm a bit annoyed at myself, because I said I wasn't going to trade today, and I have lost. But we are where we are. And I'm not sure, I've been having some thoughts as well, and I'm not sure if it's just the part of me that's kind of emotionally reacting to a loser, because I'm aware that I can sometimes question my strategy when I've had a loss, which isn't always the way, because you've got to trust your strategy. I've kind of been questioning the time frames that I've been using anyway, because I've had a lot of people saying to me that the larger time frames, like the 4-hourly, the daily and the weekly, are better for Forex trading. And I think that I can certainly see where they mean, because I feel like it does tend to cut out a lot of the choppiness. And what I've struggled with today is knowing what time to trade, and pretty much I've spent all day kind of on and off looking at the charts, waiting for something, and really trying to be disciplined to take the good trade. But the longer I'm doing that, the more I'm losing my endurance and my psychological side of trading, which in the end resulted in a loss anyway. And I've been kind of reflecting whether that approach is correct, because I've been predominantly using the hourly and the 15-minute to take trades. Although I look at the larger time frames for confirmation, I've been using the hourly and the 15-minute. And looking to take trades every day. Whereas now I'm reflecting whether that's the right course of action, or whether I should do my weekly analysis on a Sunday, and then maybe the start of week just kind of look at the daily and the 4-hourly, and, you know, trade the larger time frames, maybe have a larger stop, larger target, have more swing trades. So I'm just kind of weighing it up. It's just a few thoughts really. But, you know, how do you guys do it? If you want to comment below on what time frames you tend to use, how long you hold trades for. Be interesting to see what everybody's up to. But that's it really, just a little losing day recap for you, just to share another snippet in the learning journey as a trader. I hope you've enjoyed it. Don't forget to hit the like button if you have, and I'll catch you in the next video. Thanks guys. Bye.